By the end of this video, you'll have something 99% of traders don't. A scoring system that tells you exactly when to trade and when to walk away. 7 tests. I'll show you exactly how to score them and reveal the one test most traders completely ignore. Let's start with why you keep getting fooled in the first place. When price breaks a level, the big players need someone to sell to. Guess who that is? You. Your buy order is their exit. You're not catching the breakout. You're the exit door for someone smarter. This keeps happening because you learned it wrong. You are taught to buy the breakout the moment you see it. But real breakouts leave clues before, during, and after the move. And fakeouts hide those clues. So here's the fix. 7 tests. Fail 1. Be suspicious. Fail multiple. It's a trap. Pass all 7. Now you trade. We'll split this into 3 phases. The setup, the trigger, and the confirmation. Phase 1 happens before the breakout, and honestly, most breakouts are won or lost right here. This concept changes everything. Not all breakouts have equal odds. Some swim with the current, others swim against it. Direction matters more than the pattern. Here's a costly mistake. The market is in a clear downtrend. Price consolidates and breaks up, and you buy the breakout. But as you already know, it fails, and the downtrend continues. You just traded against the trend. Let me explain why trend alignment works. Breakouts with the trend have momentum behind them. The bigger picture supports the move. More traders will join. Follow through is more likely. But counter-trend breakouts, you're fighting the bigger flow. Trend traders are waiting to sell your breakout. Less participation in your direction, higher chance of failure. Here's the rule that saved my account. Check the higher time frame trend first. Breakout matches the trend. This adds confidence. That is +1 point on our scorecard. But if the breakout fights the trend, 0 points. Be extremely suspicious. This filter overrides everything else. Okay, trend is aligned. Good start. But I've seen plenty of trend-aligned breakouts still fail. They looked right, they felt right, and they still reversed. Here's what they were missing. Look here. Price randomly spikes through this level. No warning, no build-up. It looks like a valid breakout, but it reversed immediately. Here's the catch. Real breakouts don't appear from nowhere. Energy builds up first, like a spring compressing. The breakout is the release. What does build-up look like? Candles get smaller. Price squeezes into a tighter range. 5 to 15 candles of compression against the level. That's stored energy. When it finally breaks, that energy explodes. The move has fuel. Random spikes, no build-up, no stored energy. Came from nowhere, returns to nowhere. See compression before the breakout, +1 point. No build-up, 0 points. It's a classic fakeout. Alright, that's the setup, 2 tests down. But here's where most traders blow it. They get the setup right, and then fumble the trigger. Here's the mistake everyone makes. So price spikes through resistance. You see price above the level, and you of course enter. But the candle closes back inside the range, and you just bought a fakeout. Here's the truth. Wicks are promises. Closes are proof. That wick above the level, someone tried to break through and got rejected. Their failure is written on the chart. The close tells you who actually won the battle. Body beyond the level, winners held their ground. Body inside, they got pushed back. So stop watching spikes. Watch closes. Candle closes with its body beyond resistance. First test passed. Candle closes inside. Test failed. 0 points. And pay attention to this detail. Best breakouts close near the high on bullish moves, or near the low on bearish moves. Little or no wick on the breakout side. This shows zero rejection. Buyers faced no resistance. Now, the candle closed beyond the level. Great, but don't enter yet, because some closes are lying to you. They look like breakouts. They close in the right spot, but something about them screams weakness. Let me show you how to spot it. Not all breakout candles are equal. Some are big and bold. Others are small and scared. Their character reveals conviction. Here's a common mistake. So you see a close beyond the level, and you enter without checking how it closed. But a small, weak candle means a weak breakout. You're trading hope. But real breakouts have character. Large body compared to recent candles. Small or no wicks. Clean, aggressive move. This screams conviction. Fakeouts look different. Small body shows hesitation. Long wicks show rejection during the move. Weak, uncertain appearance. Nobody committed to this move. Here's how I read it in real time. I compared the breakout candle to the last candles. Is it one of the biggest? Good sign. Is it average? That's a red flag. Size equals conviction, and conviction equals follow-through. Look at this. Big green candle closes cleanly, breaks the level with confidence. That's a real breakout candle. Plus 1 point. Now look at this one. Tiny body, long upper wick, closes barely above the level. That's a fake out begging to fail. 0 points. Okay, 4 tests down. 3 points to go. Quick gut check. If you're already sitting at 2 or 3 zeros, stop scoring. That breakout is already dead. Don't waste your time finishing the checklist. Find a better setup. But if you're at 3 or 4 points so far, keep going. You might have something real here with the help of this next filter. Let me show you a situation that reveals everything. You see a big breakout candle. It closes cleanly beyond resistance. Looks perfect, but something is missing. Volume is average, or worse, below average. This means few traders participated. The move has no crowd behind it. The party happened, but nobody came. And here's the problem. Breakouts need fuel to continue, and volume is that fuel. Low volume means no fuel. The move dies. Price drifts back into the range. Remember this. Real breakouts show volume explosions. This proves real participation. Big money moved here. So, do you see a volume spike? Plus 1 point. Quiet volume, 0 points. If volume doesn't confirm, neither do you. Remember that test I mentioned at the beginning, the one most traders ignore. This is it, the volume test. 2 seconds to check, and almost nobody does it. Okay, you have a good setup and a strong trigger, but we aren't done. The pros wait for phase 3, the confirmation. Here's where patience separates winners from losers. You see the breakout, all the tests pass, and you enter immediately. But there's one more test you skipped. Real breakouts often come back to retest the level. They check the broken level. Let me show you a real breakout retest. Price breaks above resistance, comes back down to that level. Old resistance becomes new support. Price bounces and continues higher. If the level flips, that is plus 1 point. Now watch a fakeout retest. Price breaks above resistance, comes back to retest, and falls right back through. The level didn't flip. It was never a real breakout. So 0 points. The retest is where the breakout confesses the truth. So here's how to trade it. Wait for the retest. Watch for a rejection candle at the level. Enter on the retest, not the breakout. Better entry, less risk. Now, sometimes there's no clean retest. Price just keeps going. How do you know if that's strength or a trap? The next candles tell you. Watch what happens after a breakout. One candle can lie. It can look perfect, but it means nothing alone. What happens next reveals the truth. Real follow-through looks like this. The next 2 or 3 candles continue in the breakout direction. Momentum carries forward. No immediate stall or reversal. The move has followers. Fake-out follow-through looks different. The next candle immediately stalls. Or worse, it reverses. No continuation at all. The move was alone. You see, real breakouts attract more traders. The crowd sees it and joins. Fake breakouts get abandoned. Nobody wants to follow a lie. So the rule is simple. Watch the next 2 or 3 candles. Continuation means confirmation. That's +1 point. Stall or reversal means warning. 0 points. If nobody follows, it was a trap. 7 tests. Sounds like a lot to remember in the heat of the moment, right? That's why we turn it into a simple score. Each test is worth 1 point. Pass it, you get a point. Fail it, you don't. Maximum score is 7. The tests: trend alignment, build up, close, candle character, volume, retest, and follow through. If you score a 6 or 7, you've got a high probability setup. Take the trade. 4 or 5, it's decent, but I'd wait for more confirmation before pulling the trigger. 3 or below, that's a trap. Walk away. And here's how to do this fast. Before the breakout even happens, you're checking trend and build up. While the breakout candle forms, you're watching the close, the candle itself, and volume. After the break, you watch for a retest and follow through. Takes about a minute once you get the hang of it. Let me show you exactly what that looks like on a real chart. Price has been consolidating right at resistance. That's our build-up. The trend on the higher time frame is up, so we've got alignment. Then we get this big green candle that closes cleanly above the level with a volume spike. Textbook so far. Price comes back to retest, bounces off the old resistance like it's new support, and the next few candles keep pushing higher. That's 7 out of 7. I'm taking that trade every time. Now let's look at one that fooled a lot of people. Price just randomly spikes through a level. No consolidation beforehand, no build-up at all. The trend, it's actually down, so this breakout is fighting the current. The candle itself is medium-sized with a wick. Nothing impressive. It barely closes above the level. Volume is just average, nothing special. Then price comes back to retest and falls right through. The next candle reverses hard. That scores a 1, maybe a 2 if you're generous. Obvious trap. I'm not going anywhere near that. That's the difference. One setup scored a 7, one scored a 2. Same chart patterns, completely different outcomes. And now you can see what most traders miss. Now here's the thing. This system works even better when you combine it with market structure. That's the next video. How to stack these breakout tests with key levels. And this is exactly the kind of setup we break down inside our academy. See you inside.